Today is Monday, August 26th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. Today's guests are Steve Freed, Vice President of Grain Research at ADMIS, and Alan Bush, ADM Investor Services Senior Financial Economist. Alan, let's start with the financial markets this morning. Stock index futures were sharply lower in the overnight trade due to concerns of an escalating U.S.-China trade dispute. But then there was a sudden reversal when President Trump said China wants to strike a deal. Given the extreme volatility of the stock indexes, what is the best way to trade stock index futures now?
I would have to say the best way to trade the indices is not to. There are so many other vehicles that we can be trading that have all of the advantages or almost all of the advantages lined up in the same way. So the place to be is in the flight to quality vehicles, and I would stand aside in stock index futures. Plenty of better opportunities elsewhere.
Flight to quality buying the overnight market took the 30-year T-bond to its highest level since November of 2016. Right. Will this bull market continue for bonds?
Yeah, I believe it will. I think there's a trend here that will continue all of this year. Don't forget that the Fed apparently is on course to cut interest rates 1-2 times maybe. Other central banks are going to be lowering interest rates, all of which is supportive to the interest rate futures markets, especially the long end. Plus all of the geopolitical problems are supportive. So I think there's a lot left to the upside in the bond market, and every break, I believe, should be used as a buying opportunity.
Finally, Alan, on Friday, gold futures broke out to the upside from a diamond congestion pattern. Will there be follow-through gains in that market?
I believe there will be. Once again, it's the flight to quality influence that has supported the gold market along with low interest rates. Also, we have central bank buying of gold last year with the central banks buying more gold in 2018 than they have in about 50 years, and that is continuing this year. So there are a lot of fundamentals aligned to the bullish side, so any break in gold should be used as a buying opportunity. Some chart objectives are as high as 1,600 for the gold.
Steve, there was a lot of grain information on Friday. Chinese tariffs, increased U.S. tariffs, the pro-farmer crop estimates. How did the market react?
Well, first of all, the market thought it was supportive when the pro-farmer came out with yields below expectations, and I think that was not unexpected because most people thought they would come out below. The Chinese tariffs sent the markets quite a bit lower, especially as a following up of the President of the United States adding tariffs to the $525 billion. And then overnight, the President talked about how he had made a phone call with the President of China and they were back in talks. The problem with that is the Chinese news service says there was no phone call. So right now we're trying to decide where value is, and it seems like we're taking the tops off the grains now because of the recent information out of China.
What is the latest on U.S. summer weather and the U.S. crop condition? And is there a possibility that an early freeze could hurt crops?
You know, I think the one thing that came out of the pro-farmer tour that everybody agreed on was that the crop is late. And there's some 20 to 30 million corn acres, maybe 10 to 15 million bean acres that needs a late freeze in order to finish. So number one, I think an early freeze would hurt the crop. Number two, I think prices would react positive to that. But number three, the commercials are talking about basically not buying any of this late matured crop that's hurt by frost. And so, you know, what are you going to do with that crop? And so we just have to watch. Our weather guy is probably the only guy that's talking about a September freeze. So it's something that we have to keep an eye on.
Based on today's fundamentals, will November beans trade above $9, corn over $4 in December, and potentially December wheat over $5?
I don't think so. I think there's too much supply in the world. I think the Chinese demand for beans are down, and I think for the most part, prices of Black Sea wheat, prices of Brazil corn, price of South American beans are lower than U.S. And so I think that suggests that outside the United States, supply is greater than demand, and so I don't see us trading over those levels.
Finally, Steve, what should the U.S. farmer do with the remainder of his 2018 crop and both his 2019 and 20 crops?
I think the farmers should be aggressively in selling 18 and 19 crop if we do get a freeze or a deal rally. And then start nibbling away at 2020, because I think in 2020, I think the U.S. farmer is going to plant a lot of acres to try to make up for lost revenues. And so let's say we get close to 890 on November beans and 390 on Dees corn and 490 on Chicago December wheat. Those levels should be sold.
Thank you both. Remember, the views and opinions expressed today in this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.